Hey, good morning, everybody. It's Wednesday, January 28th, 2026. I, of course, am Hammer, founder of Originator Success, Grab and Go Social, and Rate Sensei. Hold on a minute. My camera looks extra dirty. Let's just. All right. There you go. We cleaned you up. How's that? Pretty? Look at that. A lot of sun. Getting a lot of blue today. That's right. Anyway, good morning, y'all. So great to have you. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasting to you on Facebook and on YouTube. If you're watching on the replay, don't forget, go ahead and give me hashtag replay in the comments. Let me know that you were here. And if you would like to join me live, remember, you can get a reminder text alert so that you don't miss a single moment. Go ahead and sign up for that reminder, hmmr.io/reminder. hmmr.io/reminder, or use this cool QR code. If you're on your phone right now, take a screenshot, go back to your photos, press and hold, should come up and load for you. Also, you can sign up and get our email lock advice to your inbox each and every weekday morning. www.ratelockadvice.com. I did send that out already this morning. Let me go ahead and share the screen, show you what that actually looks like. I gotta share the right screen though. Screen 1. There you go. Okay, so this is what it looks like. Oh, that just did not. Come on, get up there. All right, this is what it looks like. So there's my tattoo, by the way, because today's quote: just because fate doesn't deal you the right cards, it doesn't mean you should give up. It means you have to play the cards to get their maximum potential. Does anyone know what my tattoo means, by the way? It's 7-2 or 7 deuce, 7-7 deuce. And then, of course, that's my cool hammer card. So anyway, you can sign up and get the free email lock advice, www.ratelockadvice.com. You can also sign up for our text alerts, www.ratetextalerts.com as well. And let me bump that down a little bit. There we go. So anyway, good morning. Good morning, Zane. Great to see you. And Amy, of course, to your mom. All right, so let me go ahead and pop this off here. Good morning, Ron Siegel. Ron Siegel said today we celebrate National Blueberry Pancake Day. What's your favorite pancake? Does anyone eat pancakes? Pancakes or waffle? There's your question of the day. What's your favorite flavor on pancakes? Hold on, I'm putting this on there. What is your favorite pancake? Do you eat pancakes? I don't eat pancakes that often. I would rather have me some stuffed French toast. But what's your favorite pancake? Let me know in the comments. Good morning, Amber Moser, Eric McDonald, Nicole Semerad, Mike Brown, Bobby Cooper. Great to see you. That tattoo is a full house, Mr. Ron Siegel. The first 2 cards dealt are the 7-2, which is, as Mike Brown pointed out, the worst starting hand in poker. And it's also called the hammer. For those of you that know, there's nicknames for a lot of the poker hands, like 9 and 5 is Dolly Parton, 9 to 5. Ace King used to be called Anna Kournikova because it never wins, but it looks pretty. There's names for it. It's not a thing as much anymore, but it used to be a big thing, especially in Hold'em. There were names for all the starting hands and what you were starting with. 10 deuce is called the Doyle Brunson, because he won with it. So, but yeah, 7 deuce is the worst starting hand in poker, but a full house often wins. So that is my tattoo, and the story behind it is that without going into detail, I wasn't necessarily dealt the best hand to start early on in life. However, I have a great life today, and it's just a reminder to myself to, you got to play your cards. You got to play the cards to get their maximum potential. So, as Les Brown said, that is what we got going on today. All right, my friends, let's go ahead and get started. It is Fed Day today. Probably going to be the one of the most boring Fed days altogether at all, though. So let's go ahead and go to the charts and we'll show you that stuff. You keep answering the question of the day about pancakes and stuff. And I'm going to go ahead and just get rid of that question for now, though. Tell us the question of the day, and then I'll come back to the answer. So right now, mortgage bonds, they're basically flat on the day. We were down a basis point or two. Now we're up a basis point. No big deal. Yesterday, quick recap. Pricing came out kind of at the peak right here of where mortgage bonds were. Remember, when we're looking at this chart down here, the higher that we go, the better that it is for pricing. And generally, pricing comes out right around 10 a.m. Eastern time. So that coordinates to right about here. You can see that bonds lost a little bit of ground. And then right here in the late afternoon, lost kind of the most ground. Some of this might have been due to President Trump's comments that he wasn't really concerned that the dollar was losing value. But overall, it's more just drift. We didn't see enough of a movement to worry about any reprices worse. In fact, I don't think there were any reprices worse, even from like UWN reprices whenever, Matt Ishba farts. They reprice fast, but they also reprice better, which is nice. So take a look here at the 10-year treasury yield, 4.25. Remember, we'd like to see it go back below 4.20. 4.20 was right about here. That was a big line in the sand. You can see all of over here for months and months, it did actually stay below that. And then coming back and kind of testing that level right here, we've tested it as resistance. Now, remember, this is yield. So we want yield to go down, whereas for over here, we want this to go up. So we want bond prices to go higher. We want bond yields to go lower. So the 10-year treasury yield, we'd like to see that drop. This is the 200-day moving average, this purple line. Arguably, it would have been nice to see the 10-year stay below that 200-day moving average and kind of stay in this range between the 200-day moving average and 4.20. It is pushing up above it, though. I'm not too concerned about that, as far as the technicals go. Mike said, Ron said, with 7 deuce, wouldn't you likely fold that at the beginning? Sometimes you can't fold. Also, what a lot of games will do to encourage action. In poker, you want action. You want there to be betting. So they will play what's called the 7 deuce game. But yeah, 7 deuce generally, you're not going to play that hand unless you have to, and that's kind of my life. So it fits for me because it was called the hammer as well. So yay for a boring Fed day. Yes, today is likely to be a very boring Fed day. Let's go ahead and kind of talk about that. Where are we? Here we go. Okay. The Fed is expected to hold rates steady with broad support from Fed officials. Take a look here at what is being priced in with Fed futures. Absolutely no expectation at all of a Fed rate cut. We've talked about this over the last couple of days. As we head into that March meeting, also no expectation of a Fed rate cut, less than 20%. And as we go into April, a little bit higher than it was before, but still only about a 30% expectation that we could see a rate cut by then. Now, remember, Fed Chair Jerome Powell is going to be done as Fed Chair in May. However, his term continues through 2028. So there's going to be a lot of questions about that today. So basically, we've got there's no policy change that's going to happen at the Fed. So we've had 3 rate cuts the last 3 meetings and no rate cut expected this meeting. There's no dot plot. There's no anything to really cause bonds to move, right? It should be very boring at 2 p.m. Eastern time when the Fed comes out with their policy statement. Now at 2:30, Fed Chair Jerome Powell is going to hit the mic. And I'm sure that his initial comments will focus around Fed policy. I don't think he's going to address any of the other drama, but he's definitely going to get a lot of questions. This Fed meeting, this Fed press conference with Powell is the first one since the bogus Department of Justice investigation and the grand jury subpoenas for the renovations to the Fed building. That whole thing is just a bunch of crap. And it went over as well as a fart in church. It really has not gone over well in the Senate, even with the GOP. So I expect to see that all kind of really disappear. Trump played his hand, and this one did not go well. So, he knows enough to get away from something when it's not working. So I think he'll get away from that. Now, there's going to be a lot of questions about what's Powell going to do? Is he going to stay on? Ron had pointed out something that there was a loophole that he could stay on as Fed chair. I don't even think that's going to even be brought up. I think it'll just be more of, is he going to stay with the Fed? And overall, he generally does not answer these questions. He basically declines to answer, and he'll focus and refocus it on Fed policy. I don't think that he's going to change his status quo here. I don't think he's going to start answering. He's going to get asked about the Fed's independence. This all of the questions are going to focus more on politics than policy, and Powell's not going to play into that. So none of that really is going to move markets. It's not, the politics aren't what markets are currently reacting to. There's definitely a role to be played here if Trump were to have more control over the members of the Fed and were able to push rates lower and heat up the economy, and it would play a role in markets. But I don't think that Powell's going to play into that. He's really going to shut down those questions. I'm sure they'll be asked more than once, and I think he'll just shut them down. So, Bill Stevens, have precious metals replaced the bond market for a safe haven? Yes. Yeah, we talked about that the other day. Gold definitely at 5,000 an ounce, much more of a safe haven than bonds. And it's where Michael Morano should have locked 2 loans last Friday, 1,200 YSP. When's it coming back? It's not. Answering. So I'm trying to when do they close? Do they close soon? Because last week, I mean, I don't know why you would have. Friday should be seeing better rate sheet pricing now than Friday. Mike, if you're not, there's something wrong, because when we take a look here, look at where things have been. Last Friday, you're talking the 23rd. So 21, 22, 23. Here, Friday was 6.19, and now we're at 6.15. So when you talk about last Friday, are you talking about the Friday before, which would have been the 16th? Because then that would have been like here, and that would have been better pricing. So if you're talking all the way back there, yes. If you're talking about over here, no. You should see better rate sheets today than what you saw on this past Friday. This past Friday, bonds were at that's the 10-year Treasury. I'm sorry, here. Bonds are at 99.94. And we're up to 100.04. We're 10 basis points better. You should see better pricing than what you saw last Friday. That would be a weird one. Ron Siegel, the investigation was all started by Powell. You'll have to give me more detail on that. I think that all of that was crap. Powell ignored inquiries by the U.S. attorney. When the U.S. attorney escalated, Powell released a comment. 2 Fridays ago, Amber said, yeah, that's what I've got to think. 2 Fridays ago. Ron said he thinks gold is very speculative and would not use it as a safe haven, but traders are. Anything doubles the price in a year can drop just as quickly. Right now, gold is almost as speculative as Bitcoin. Yeah, I wouldn't be. Yeah, Friday 116. Yeah. So, and that's what we talked about. Mike, dude, are you not watching regularly anymore? That Friday when things dipped, we were like, yeah, take it. We did that. We did that the week before too, when we got that first dip from here. We did that on the 9th. So yeah, definitely. I could see it being down. You might get back. What was here? Let me take a look here. The 16th. We were at 100.03. That's kind of funny because that's exactly where we're at right now. So here, let me show you the screen, and then we'll come back to this. Entire screen 1, share, pop this here. So Mike's talking about where bonds were at on the 16th. The 16th, we were at 100.03 at close. We were 100.16 on Thursday, which is why your Friday pricing would have been better. So you're about 13, 15 basis points off of here. It's possible that we could recover it. Take a look at, the direction that we're heading right here. You'll see that bonds are improving. Actually, we use green since that's right? Like we're seeing a nice improvement here. And there's no reason you couldn't trickle up a little bit further and get that 1200 back. But it's a gamble. It's definitely a gamble. And you're looking at YSP more than rate, and not that you shouldn't be, but yield spread premium. You're talking about rebate pricing basically is looking, and that's going to be more if next week's jobs data is weak. So I don't know how long you have until those loans come back, but you're definitely, if you're floating into them and they're closing soon, there's a gamble. But Ron, with GSEs now allowed to build MBS holdings up to 450 billion. Yeah, I saw that as well. We'll still see more benefits to MBS. I agree with what Ron's saying. So what Ron is pointing to for everybody, since I didn't address that. So right now, if you take a look, the 10-year Treasury is at 4.25, which is higher than it's been. Remember, I told you that a higher yield is bad. Look at how high it's been compared to where we were all the way through December into the beginning of January. And yet mortgage bonds are doing better. That's what we call the spread between mortgage-backed securities and the 10-year. The reason that we're seeing that spread tighten and that mortgage bonds have improved, even though the 10-year Treasury yield worsened over here, is because of the GSEs, Fannie Mae, Freddie Mac, buying up, or the speculation they will continue buying up mortgage-backed securities. So it creates more demand. There's less supply that drives up the price. And that's what has helped us. So as Ron is saying, we could see more benefits to MBS because the Fannie Mae and Freddie Mac, not only did Trump say that he was going to have them buy 200 billion in mortgage-backed securities, but they increased their allotment. So the government and the board and the way, I don't know all the details, but basically they've been given a bigger window to buy from. They can buy more of them. Now, they didn't commit and say they were going to buy 450 billion. But whereas before they might have been limited to where, again, whether it was an internal limitation as part of their, holdings, or whether, I don't know where the limitation comes from, but there was a limitation. Now that has been raised, that ceiling, to 450 billion. Which gives them a lot more room to continue buying bonds, which, again, it's not straight on quantitative easing. I mean, it's not driving rates down, but it is tightening up those spreads and helping to see a little bit better pricing. So keep that in mind. Hope that helps. So, all right, my friends. Well, we'll see where we are at as far as all that Fed stuff goes today. Let's go ahead and talk about what pancakes that you guys prefer. I like banana nut pancakes. Randy Teakle says pancakes are not his thing. And, well, I can't help that you're golfing, Morano. Right? Let's see. Chocolate chip pancakes for Amber Moser. I don't like chocolate chip pancakes. Anyone else not like chocolate chip pancakes? I just don't like chocolate in my pancakes. I don't know. I'm kind of odd like that. But there we go. Allison Foy, banana, walnut, but she has chocolate chip in there. Buttermilk with banana sounds yummy, Nicole. I could definitely get into that one. Let's see. Zane, which favorite? Anyone else want to share theirs? That's funny. I knew it would get there. Einkorn says waffles over pancakes. My wife would agree with you. Dutch babies. I've never heard of those. Anyone else ever heard of something called Dutch babies? Brandy Brickler, skip the pancakes. Chocolate's good with anything. Genesia says blueberry pancakes. Yeah, that's today's blueberry pancake day. So you're right on there. Holly, not a pancake eater. If I had to choose cinnamon swirl, I'll take some cinnamon, banana, walnut. I'll take it. So, all right, my friends. Well, thank you again. Other question, hot or cold syrup? Dude, only hot syrup. Come on, man. Hot syrup. Why would you want to eat cold syrup? Hot syrup. Strawberry or banana for Vicky McSweeney. Dutch babies are German pancakes. I've never heard of those, though. I'll have to check them out. Apple pancake, very sweet, not good for your diet. Yeah. So anyone cold syrup, first of all, not that high fructose corn syrup bullshit that they put on the store shelves. I want maple syrup from maple trees from Vermont. I want real maple syrup, warm with butter in it. That's how I'm going. I don't need a lot of syrup, just more of the butter than the syrup, actually, just enough to add a little sweet to it. So that's it for me. I am sheltered. Siegel. So, all right, my friends, I'm going to wrap it up. Thank you again for joining me. We'll see what the Fed does. We'll talk about it tomorrow. Please join me then, 9:30 a.m. Eastern time. See you later. Bye-bye.